Welcome to the 60-Minute CFO podcast, where we dive into the world of business finance and uncover the secrets to running a thriving and profitable business. I'm your host, Tracy Beck, an entrepreneur, author, and your guide to achieving financial fluency in easy-to-digest lessons. This podcast, along with our book, courses, and tools, are designed to help you tackle the challenges that keep small businesses stuck. We'll explore why so many businesses struggle and fail, uncover the missing financial knowledge that could be holding you back, and show you how to take actionable steps toward success. We teach you how to make meaning of your numbers by identifying key relationships and trends so you can analyze your past performance. We learn the key drivers of cash flow because no one likes to run out of cash. And we dive into how to forecast the future so we can set revenue and profit goals and meet them. Whether you're a seasoned business owner or just starting out, you're in the right place. 60-Minute CFO is your source for understanding the numbers, making smarter decisions, and building the business and life you've always envisioned. Let's get started. Every minute, another small business closes its doors. What's going wrong, and how can you ensure yours isn't the next? In today's episode, we're uncovering the most common reason businesses fail, and it might surprise you. Today, we are diving into a sobering statistic. 20% of small businesses fail in their first year. 50% don't make it to year 5. And by year 10, only 30% of businesses are still standing. But why? What's causing this mass exodus from entrepreneurship? Is it bad ideas? A lack of customers? No. The answer lies in something much simpler: cash flow and financial management. Here's the problem. Most business owners start out with a dream. Maybe you wanted to be your own boss, follow a passion, or create a legacy for your family. But here's the hard truth. Dreams don't keep the lights on. Passion doesn't pay the bills. And even booming sales can't save a business with poor financial practices. The top reason businesses fail, responsible for 82% of closures, is cash flow problems. And here's what's even scarier. Many business owners don't even realize they're in trouble until it's too late. Maybe you've been there. Your bank account looks full, but then payroll hits and suddenly you're scrambling. Or you're making sales, but your expenses are eating up every dollar, leaving you with nothing at the end of the month. These aren't just numbers on a spreadsheet. They're the difference between survival and success. But here's the good news. Financial fluency isn't about being a math genius or having a fancy MBA. It's about understanding the basics of your numbers so you can make smarter decisions. Think of it like driving a car. You don't need to know how the engine works, but you do need to know how to steer, when to refuel, and what those blinking warning lights mean. In your business, that means reading your financial statements. Your profit and loss statement, balance sheet, and cash flow statement are your roadmap. At 60-Minute CFO, we teach you how to tell what your numbers are really telling you using relationships, which are ratios, and learning how to read trends, which are stories. Understanding your cash flow. Where is your money coming from and where is it going? And is it the same as profits? What is the relationship between cash and profits? And the last piece is we must learn how to forecast the future. Don't wait for a crisis in order to act. We have to build plans now that set us up for long-term success so that you and your leadership team can follow and be proactive rather than reactive. Let me share a quick story about a client I worked with and their financial fluency journey. Let's call her Jane. Jane and her husband built custom truck campers, like what goes on the back of your pickup truck so you can go out and enjoy time in nature. They were struggling to understand how much to charge for their beautiful, handmade luxury truck accessories. They knew they needed to charge more than the camper's cost to build, but they were fixated on making a certain dollar amount per camper sold, which they referred to as their markup. The problem with this was that as the project progressed, they continually added bells and whistles that would erode this markup till they would break even or begin to risk losing money on a build. Together, we looked at their pricing and cost of the product, and instead of using dollar amount markups, switched to understanding the profit margin on each product. Margin is a percentage above and beyond the cost instead of a dollar amount added to the cost. This way, you can guarantee that you make money on a varying basis. As the costs go up, so do your prices. And we also get clear that what felt like little increases in cost can actually add up to potentially big losses. So they implemented a strict build list and change orders for anything beyond that. What's better is that they now knew what margin they were shooting for. So instead of thinking of how many dollars to add to the cost of something, they always increased it by the margin, which is a percentage of the amount it cost. The result was peace of mind that their costs and profits could scale, and they had a predictable estimating model. So, what about you? Do you know your costs and your profit margins, or are you using a markup? Or do you not know either? Here are some quick action steps you can take. Pull up your last 3 months of income statements. This is called profit and loss if you're in QuickBooks. Choose the checkbox to customize this report to include a column for percentage of revenue. Note your percentage of revenue for gross profit, operating profit, and net profit. These are your 3 levels of profitability, and they are your profit margins. Ask yourself, does this match what I expected? If not, how can you meet your desired margins? If the answer is no, don't worry, you're not alone, and that's exactly why I created this podcast. In our next episode, we'll tackle another myth holding business owners back: the idea that passion alone can fuel a successful business. Spoiler alert, it can't. Thanks for joining me today on the 60-Minute CFO podcast. If you found this helpful, please subscribe and share it with another business owner who could use a little financial clarity. Together, we can beat the odds. Until next time, remember, the key to success isn't just working hard, it's working smart. And that starts with understanding your numbers. Thank you for tuning into the 60-Minute CFO podcast. I hope today's episode gave you fresh insights and practical steps to better understand your numbers and take control of your financial future. If you enjoyed the show, don't forget to subscribe, leave a review, and share it with other business owners who could benefit. Your support helps us reach more people on their journey to financial fluency. To dive deeper into what we talked about today, visit 60minutecfo.com, where you will find more tools, resources, and ways to connect with me, Tracy Beck. You can join our community, download our free resources, and sign up for live and recorded courses. Until next time, remember, understanding business finance is a journey, not a destination. Create 60-minute habits of dedicating time to understanding your numbers, and before you know it, you will have built the profitable business and life you've always dreamed of. See you in the next episode. And this is important work for you to do because no one will care as much about your business and finances as you do.